Hey, good evening, everyone. Today is Monday, June 30th, 2014, and I'm bringing you another market analysis video. I'm hoping to get through the whole video before we may lose power here. It's once again storming like crazy out. Seems like it's been raining here in the Midwest every single day the last couple of weeks. So let's get right to it. Really good technical markets going on right now in the ES and the 6E. But we'll start with the ES, and one of the reasons that things are so technical is that a lot of the time frames are all trending in the same direction. So we have the daily, the 15-minute, and the 512 when we drill down at points in the day. When all those are trading in the same direction, we have a lot of confluence, a lot of momentum, and follow through. So, the volatility may be a little bit low right now, which is typical in the summer months, and the ranges tend to be a little bit smaller in the summer months, meaning, the distance that the markets move in an intraday basis tends to be a little bit smaller. You'll notice the candles sizes are a little bit smaller when volatility is lower, but that also means that we have more trending when volatility is lower, and we also have less moves that kind of shake you out of overnight positions. So I've got a handful of the halfway backs that we'd been trading into all the way up until this point, starting off the year from October of last year to December's highs. We pulled back to the 50, traded up to the target, pulled back to the next 50, get rid of this, traded up to and through the next target. This one we don't need. So we traded up through the target. We had the entry at 1812, which we've talked about for some time now. We traded up to the target and then broke through it. So we can go ahead and draw from highs to highs. And I'll get rid of these. And that gave us the extension from about 2 weeks ago at 1923s. Now that has a target up at 1970s. And in the meantime, we broke to new highs and pulled back conveniently into the daily long at 1939s. And that also has a target right up at 1970. So going forward in the next week or so, today's Monday, the holiday 4th of July weekend coming up on Friday. So we'll have a 3-day weekend. The markets will be closed on Friday. Typically things slow down into 3-day weekends. So it's, I don't foresee us just ripping to 1970 necessarily before the holiday weekend, but certainly within the next week or so. So if we do kind of pitter out here and just kind of don't really go anywhere, I wouldn't see that as a bearish sign. I would just see it as, traders taking the week lightly, closing out some of their positions, going into the weekend a little bit thinner, and then coming back next week and kind of pushing the market to new highs up at 1970. Another reason things are so technical is that we've had rollover. We got through rollover, so now we're on the next September contract. So we are on. So they go HMUZ. H is for March, M is for June, U is for September, and Z is for December. So if in your Thinkorswim platform, you can just do /ES, and that gives you the continuous contract, and it'll keep the front month the active contract. If you needed to put in the entire ticker symbol, it would be ES and then the letter HMUZ. So right now we are on U, so it'd be ES U and then the last digit in the year. So it's 2014, so it'd be 4. So ESU4 is the contract that we're on. So things get a little bit weird around the rollover week. And let me see if I can pull up my. Yeah, you can probably see the calendar here. So rollover is the second. The Thursday before options expiration. So options expiration every month is the third Friday so it was the 20th. And so futures rollover occurs the Thursday before that, or I guess 2 Thursdays before that, essentially the 12th. And so in the meantime, while volume is shifting to the new contract, so the September contract becomes the front month, we essentially have two contracts out there, and traders are splitting because some of their trades are still taking place in the back month, and then they're putting on new positions in the front month, and so the ES can be a little bit less technical. So once all that settles out, things become really technical again. So if we drill down and look at some examples, the daily chart, 1939 is the daily setup we have here. Targets at 1970. If we go to the 15-minute chart, you can see we touched it twice. We didn't really get much. This was early last week, Wednesday, I guess, about 8 in the morning. I've got 24 hours worth of data, so we're looking at everything here. And drawing from lows to highs, we had a nice 15-minute setup. So that's where, rather than just limiting a daily chart, a lot of times we can kind of come down and be a little bit choppy. So, if you were to limit a daily chart with a 6-tick stop, chances of getting stopped out are pretty high. So that's why I like to wait and zoom into a 15-minute chart, or even when the 15-minute ranges are wide, look at a 15-minute chart and then zoom to a 512 tick chart for entry. So we traded here in the morning, but it happened to be it was right about just after the open, just before 9 o'clock, and traded into the 15-minute, and then traded right to its target. And then you take the next one, lows to highs, and then that traded entry to target, and then essentially took us into the evening, going again back down to the 50%, up to the target, and then on Thursday last week we just kind of moved sideways in the overnight, and then had that kind of large sell-off right at 9 o'clock, or right at the open rather, and then traded back down into the daily again. So if we then draw the 15-minute, you take it again, lows to highs, same thing, traded, went to its target, you can do it again, lows to highs, pulled back, traded. This time it went through the target, up and then into an extension. So if we take, we can go highs to highs, and then once again highs to highs, and then that second extension didn't hit its target, it failed, and we pulled back into the full 50% 15-minute, and we pulled back, came right to the 15-minute, and had a little bit of rally, and then we tested again a third time, and then finally came up to the target after retesting 3 times. So what this shows you is that we can have a daily level, as we do here, 1940s. We can have all these entries into that time frame, and we can take profits, and we can take these smaller setups over and over again for, even when ranges are small, you're still taking 5 points a setup. And if you can take a couple of those a day, I mean, it doesn't take much. You can have a couple 4 or 5 point moves here on the 15-minute chart at a daily level, and that makes for a great day. And so that's why these trading at these daily levels is so powerful. And you might be saying, oh well, this wasn't super clean, it didn't go from the 50% directly to its target, but that's okay. You're still able to get into the trade. It moved in your favor. You're able to tighten your stop, whether it's to break even or just a little bit further, or even just leaving your stop at -6 and letting it retest. Being a little bit loose with your stop, letting it retest a couple times, and saying, okay, I'm either out for -6 or I'm essentially profiting 10 points, which was the range here from the 50% to the target. So the risk to reward is really great, and we don't always go from the entry to the target in a matter of minutes. And on these 15-minute charts, the ranges, a 5 or even here as we see a 10-point range, 10-point move is pretty large. And it only took half a day. Fridays I guess was a little bit more than half a day, but there's opportunities to get into the trend. Things are very technical, and you can take more than one setup, as we saw is a great example on Thursday, just kind of going entry to target, and then we pulled back again from lows to highs to the negative 23% target, and then we just kept doing that 3 times, or I guess 2 times that day, and then the market closed. So that's kind of the philosophy here, is to look at larger time frames, look at the daily, and then zoom into the 15-minute for a little bit more precise entries. And now that we've hit the negative 23% target, you can take that low that we had to highs, and then just do the same thing here at the next day. This is today, Monday. Earlier, before the open, going from lows to highs, and trading down into the 15-minute. Then we broke out, and things got a little bit crazy this morning. But for the most part, going from the 1948 15-minute to highs, it was a fairly clean move. We never broke the full 50%. If you were to draw from lows and just keep trailing from your original anchor, trailing the 61.8 here. So like right now, 1950s. If you were to just keep trailing your stop up, up, up until we hit the target, we never broke the 61.8 until after we hit the target. And then things kind of didn't really go anywhere in the middle of the day over lunchtime, but that's okay because we already traded from early in the morning up to the target. So looking at the daily and the 15, you can do the same thing by looking at the 15 and then zooming into the 512 for really small time frames. In the summer, I like to stick with the 15s more because the ranges are smaller. When the market's moving really violently and volatility is high, you can look at the 512s and take lots of trades on those smaller time frames in the tick charts because the ranges are wider. So if I can get a couple more things in before the storm really picks up, I wanted to look at Apple, and Apple is an extension from highs to highs because we traded from lows to highs, pulled back, and then we broke out of the negative 23 and just skyrocketed. So drawing from highs to highs gave us this extension here, target on Apple now that it's split up at $97.30, and strong volume here on the last couple of days of the rally. Gold is another one that had some interesting price action here, strong volume, big body candle moving higher, so that's one to keep your eye on as we keep breaking out and breaking some of these swing highs. Let's see, and then I guess lastly the VIX. And if we look at the VIX, we can see it's still down below in the low teens. And as long as we stay down here in the low teens, swing trading opportunities are plentiful. Look at how clean the market is, where every day we go higher, we don't break the prior day's low, until we kind of roll over a little bit, pull back, and make a nice stair step higher, and that makes for really great swing trading opportunities versus an environment back here in March where we're kind of moving sideways. We're up, down, up, down, up, down every other day. The volatility was a little bit higher, so the intraday, the ranges are wider, or larger, as you can see by the larger big body candles, but it doesn't mean necessarily that they're as technical. So that's what I'm looking at here on the broader market and the ES. There will be no market analysis video next week in lieu of the holiday, and also my wedding that's coming up. So we'll return with a video in 2 weeks. I'll post some other interviews in the meantime, and I have a some strategy Q&A that I've put together with some of the questions that have been rolling in via email. So if you do have questions, keep them coming. It might take me a week or so to get back to you over the holiday weekend, but just email me, tim@EminiMind.com, and I'd be happy to answer those. And like I said, I'll be putting together some of those questions with some examples that I've been responding to people into the dashboard and kind of compiling some of those responses. So hope you all have a great week, and we'll talk to you soon.